Hi, and thanks for tuning into the LTAG YouTube channel. In this little Q&A session, we're going to talk about, do all gaps get filled? That's gaps in price action. Sometimes they jump and sometimes they jump back and fill the jump that went up or indeed down. We'll see if that's always the case. A question I'm often asked about technical analysis is that when price jumps by a few p or a few pounds or a few percent from one level to the next without any intervening prices, which is called a gap, do prices always come back down to fill that gap? That's what we're going to look at. Now, to help us with this question, we're on TradingView here and we're looking at NVIDIA Corporation on the daily chart, and we're looking at the action in the course of the last few months. NVIDIA around the middle of May announced some cracking results where basically they outstripped all analysts' expectations of their chip sales, particularly for AI chips. As we know, the AI boom is progressing as we speak, and their share price jumped from close on 316p through to 380p or thereabouts. A huge jump, bearing in mind that was something like a $200 billion market cap increase. A gap and an increase larger than the market capitalization of virtually every other stock on the planet, bar the largest. You would expect that gap to be filled, but you can see that price, so green means price is going up, red means price is coming down. Price has shown no desire to fill that gap, and indeed has gone up, gone back down to effectively test that zone again, but then has continued upwards. It wasn't simply then though. You can see that there are other gaps. There was another gap here in February, and that was only partially filled a little bit, as you can see here. And then there are other gaps here on the downside which again weren't filled, and here are some more and some more and some more and some more, and if we go back in time we can see some more gaps on the upside which weren't filled also. So when people tell you that all gaps get filled, you can see here with a very prominent share that that is not the case. It sometimes happens, but particularly with large caps, where fundamental news is so well understood, those moves are definitely often fundamental moves and the gaps are not filled. But that's not the case necessarily on AIM stocks, and I'm going to show you a small biotech. It's called Avacta, which has had a gap recently where that gap was filled, and I'll explain probably why that was done. Let's have a look. So this is TradingView again. We're on the Avacta small biotech chart, but this chart is on the 15-minute level, because here we're going to look at a gap that was a little bit different in its nature. It's an intraday gap on an AIM market where the prices are dictated by market makers, and there are far more traders prevalent within this market. And the gap was here. There was an RNS announcing some good news, and the jump went from 105.6 through to 112.8. So it was only a very small jump of maybe 105 to 112, maybe 7% or so, and that gap persisted for a fair while, whilst the price oscillated in terms of various cycles. This 1, 2, 3, 4, 5 is called an Elliott wave count. I'm not going to explain that just here, and there's an Elliott wave count that comes back down, and these are various statistics relating to those counts. But the important point is that this gap was actually in fact filled not too many sessions later. So this is on the 28th and this is on the 23rd, so about 5 days later, which is about right for an intraday gap. And the reason being that this gap was news driven, in the expectation of better news coming. The better news in fact did arrive for this particular company at this point, but as always, news is always sold. And when you've got a small micro cap where there's traders and the volume that is traded is actually very thin, as is the case here, less than 5% of the shares of this company are traded per day, then it's very likely that that gap will in fact be filled, because it's an intraday gap, it's a micro cap company, and the gap was not huge as it was in our previous example for NVIDIA. So not all gaps are equal, I think, is a thing that we can take away. If it's an intraday gap on a small market like the AIM market in the United Kingdom, then that gap is likely to be filled. If it's a very large cap like NVIDIA on a main market like in the US, I think it's on NASDAQ, then subject to the fundamental news, which in that instance was very, very strong, it will not get filled. And indeed, many of the gaps on NVIDIA were not filled. So buyer beware, not all gaps are filled. Hope you found this little session on gaps and do they get filled useful, and it helps to color your judgment in the future. Look forward to the next Q&A video, and I'll see you there. Ciao.